Now, for session 2, rebalancing the U.S.-China economic relationship, trade, investment, and technology. We have with us Nick Borst from Seafarer Capital Partners. Thank you for being a sponsor. Chad Bowen, David Dollar, Lingling Wei, and moderating this session is our board member, Gary Rieschel. Gary.
Yeah, good day. It's an honor and a pleasure to actually be moderating this session as the last day and the last event in the Seeking Truth Through Facts series that Margaret and the Asian Society of Northern California has put together. I'm Gary Rieschel. I'll be the moderator for the first panel on rebalancing China-U.S. trade, investment, technology relationships. First of all, I'd like to thank Kevin Rudd for his introduction. There's really no one who can boil the ocean of U.S.-China relations and the various implications of them the way that our new president of the Asian Society can do that. So, Kevin, thank you very much. So the second thing I'd like to do is briefly introduce the panelists. And we'll start with Lingling Wei. So Lingling is a very well-known reporter from the Wall Street Journal and also the co-author of Superpower Showdown, which was published this last year. Second, Nick Borst, who is the Vice President and Director of China Research at Seafarer Capital, and also writes the Prevailing Winds blog. Chad Bown, who is a Senior Fellow at the Peterson Institute, authors the Trade Talks podcast, and David Dollar from the Brookings Institute, who's a Senior Fellow, host of the Dollars and Cents podcast, and author this last year of China 2049. So I'd like to invite all of them to join us, and we'll begin the session. As you can see, all the panelists are very well versed or very well in the thick of it on all the major issues affecting China-U.S. trade, investment, technology relationships. Many of the issues that Kevin just highlighted, there are alternatives, but the alternatives actually are going to force us to reframe how the U.S. thinks about itself as well as how we think about the U.S. and China relationships. As for myself, I have spent the better part of the last 30 years in Asia, 5 years in Japan and 15 years in China, or 12 years in China. During that time, I launched 2 major venture capital groups in the US and China, one called SoftBank, which is quite well known now and quite different now than it was then, and Qiming Venture Partners. And Qiming has about 300 companies. We've had over 40 IPOs, 25 of the companies have reached $1 billion in market cap. Many are names that you might be familiar with, like Xiaomi, Meituan, Bilibili, ByteDance. And we're the leading healthcare investor in China. So we've had a good seat the last 15 years in how the China technology has developed. There's been the evolution of 2 major trends that I think are important to really understand. One is the evolution of innovation. In the early days, going back 20 years when you were investing in China, you would see many companies were looking at what was happening in the US or happening in Europe, but primarily the US, and you'd be copying that model for China. So you'd be taking that idea and bringing it in and localizing it for the Chinese market. That moved quickly in the 2009 and 10 timeframe to more one of where you innovate in China. And I want to draw a distinction between innovation and invention. So the innovation aspect of this is really important, where the Chinese market started to take on its own unique characteristics and grew not just away, it grew in sync, but also away from the United States market, particularly in certain key areas. Enterprise software being one, how AI is used being another. The fundamentals of how the healthcare industry has evolved are also quite different. So now we are in that phase of invention. And so this transition over the last 20 years has taken quite a few people by surprise, and it's important to have that background as a context for our discussions. The other is a simple concept called JGE. JGE simply means just good enough. And when you reflect back on where China was 20, 30 years ago, everything that was coming out of China was really designed to be just good enough for China. And then through contract manufacturing, license agreements, and so on, became just good enough for the world market. Now it's really important to understand what that's done is it's created a consumer base, it's created an enterprise base where what's happening in China really is good enough for the world market. And that's a transition I don't think we spend enough time thinking about. because that's what's created this underlying economic and manufacturing powerhouse that's serving the world's markets. So with that, let's get to the meat of our session. So the first question that I'd like to ask goes to Lingling Wei. And Lingling, I'd like to ask you, what are we getting wrong? So you've been an astute, very focused, detailed observer of China, both in China and now outside of China. And the context that we approach China from, what's wrong with it? And as Kevin said, Xi Jinping has some very specific viewpoints. You can see the actions taking. What are we missing from the standpoint of just getting wrong in the basic assumptions we're making?
Sure. Thank you very much, Gary. I'm really honored to be here, share this forum with some of the best China watchers here. So China is a myth, not just to people in the West, but if you ask a lot of Chinese officials and just Chinese to explain, how the party works, how the country works, it's very likely they probably wouldn't be able to give you a very comprehensive answer. So I'm going to really try my best to answer your question here. So first of all, if you can indulge me a little bit, I'd like to talk about, one main conclusions we had in our book, Superpower Showdown, which I co-wrote with my partner in Washington, Bob Davis. So one of the key themes about China we had in the book is just about, how the West, Washington in particular, has misread the President Xi Jinping. He really isn't the kind of reformer the West and the US had hoped for. So that's one thing. And the other thing is, we really try to explain greater detail in the book how both sides frequently miscalculated their leverage over one another, and not just China misread the U.S. Overestimated its leverage over Washington, but even more so for the Trump administration. A lot of people think China is this one party, one system country, so it must be monolithic, right? It's just one party, no debate, no real dialogue among different agencies, etc. That couldn't be further from truth. Yes, it is led by one party, but is anything but monolithic. One interesting anecdote we had from reporting out the book was during the Argentine meeting between Trump and Xi Jinping. Trump was there basically in his usual way, basically, just trying to get Xi Jinping to understand how much weight he has to pour to get the whole group in the room. Basically said, as you know, I hope you know, we have a lot of different opinions here in terms of how to deal with China. And Xi Jinping immediately responded to say, same here. On our side of the table, we just have as many different opinions as you probably have. So it's really the case, during the past 2 years, as we see Liu He, the chief trade negotiator, right? He, throughout the negotiations, he assembled a team of negotiators on Chinese side that represents different interest groups, different industrial sectors. You have SOE representation on the team. You have financial regulator representation on the team. You have information technology representation on the team. So that shows what? That shows that he is trying his best to forge consensus among various ministries and the agencies, in order to have this dialogue with the U.S. side. So that just shows that, another example to show, how behind the scenes, the Chinese side has done great job presenting a united front, to the outside world in public. But behind the scenes, they're just really, different opinions, different interest groups, and they may all have a say in how things should get done. And obviously, we know that President Xi Jinping has consolidated power dramatically, right? He's made himself chairman of everything. But even though that's the case, there's no absolute power in China. To be able to, keeping power, remaining in the office, he has to balance different interest groups as well. It's not just, he can call the shot. He can just, make decisions, especially, as big as U.S.-China relationships on his own. He has to, incorporate all the different opinions, and but ultimately, his number one priority is to make sure the party is firmly in control of the country. Nothing should ever challenge that. That just, complicated a lot of, negotiations we've seen over the past few years, and it's going to continue to complicate U.S.-China relationship going forward.
So, Lingling, one follow-up for that, and I'll start with a short anecdote. There's this concept that there's a centralized group in China that's dictating the development of technology, that it all comes from Beijing, and that it's all directed development. And I would just share the story and then ask your opinion in terms of how much you think that is true or not. When we were raising a fund to do advanced healthcare investing in China, we received backing from NDRC. And the most senior people at NDRC were very excited. And in the meeting, they told us, we really want you to do cutting edge, really leading edge stuff. This is great. That meeting ends. The next group comes in, which are their underlings, kind of their managers. And they say, yeah, what they said is fine. Just don't lose any money, which kind of makes it impossible to do the first thing. But how do you see the either coherence or incoherence in centralized government policy related to technology? Because there is this myth out there that this is all being directed by the Chinese government and not necessarily private enterprise.
Well, I do think overall, the central government definitely is playing leading role in directing tech investments here. For the next 5 years, China really sees tech investments as one of the main growth drivers. So they're pouring money into sectors like semiconductors, chip, AI, and biotechnology, and probably the area you talked about too. But at the same time, I do believe the central planners also try to learn lessons from the past, because China's industrial policy so far actually has hurt China more than probably foreign companies, because it has led to tremendous waste. A lot of money just spent for no good reason, and got local government levels, especially central SOEs, become so much more indebted. So they have learned their lesson from the past failures or weaknesses in the industrial policy side. They do now try to get private firms more involved, right? So it's a smart move. However, the risk is they're so obsessed with control. So you run the risk of trying to make private firms just act like SOEs. So that really is not good for innovation or technological advancement. So that is the biggest risk the Chinese government faces now when it comes to their ultimate goal of achieving technological independence. We already seeing some worrying signs going on in China these days, the kind of campaign style crackdown on big tech, big data, what kind of messages that would send to aspiring entrepreneurs. That's really something the leadership should be thinking about.
Okay, thank you. We'll get back to Jack Ma in a little bit, perhaps, when we cover some of these other topics. So next, I'd like to have Chad Brown address the issue. Kevin Rudd brought this up in his opening comments about how Beijing has somewhat preemptively started the relationships with RCEP, the EU, talking about joining TTP, somewhat preempting some of the steps that the Biden administration may have been looking at in terms of forming allies. And I think Kevin made the point very well, which is the U.S. for the first time doesn't just tolerate allies, but truly needs allies. Will multilateralism lead to U.S. trade leadership? I don't necessarily think it's that easy, but you write quite extensively on the different strengths and the nature of China's strengths as it relates to multilateral trade. And so I'd like you to address that question, and we'll take it from there.
So, and for me as well, thanks for the invitation to be a part of this. Maybe let me give two examples to show just how difficult and challenging this is ultimately going to be. One broadly, and then one in more specifically in the tech space. So, yeah, the Europeans, as Kevin indicated, it's kind of somewhat surprisingly right before the end of the year, announced that they were going to have an investment agreement with China. And not unexpectedly, the incoming Biden administration folks were kind of shocked and said, we've been trying to send signals that we're going to work with allies and work on a common approach with China. What is this thing all about? And part of this is the legacy of the Trump administration. The Trump administration going alone, signing their phase one agreement with China, worried about purchase commitments and getting American firms access and not choosing to go multilaterally, has sort of left other countries, the EU in this context, to sort of have to look out for themselves. So some of this is just signaling, I think, to the Biden administration that it's not going to be easy to work with allies. They've been mistreated for 4 years. And there's a real concern about, even if the Biden administration is well-meaning, what comes after the Biden administration. And the United States has now changed, the perception of the United States has now changed around the world. So I do think that this is a critical issue. The one area I think that's also of interest in the tech space that also Kevin touched on is on this question of Huawei and semiconductors, and Lingling mentioned it as well. And I think it's worth going into here. It just shows how hard this issue of multilateralism is in practice. So what's the story? Well, I probably don't need to recap it for your audience or our audience here, but it's basically we have this one Chinese company that we're very worried about for national security reasons, Huawei. What do? They make essentially two things. They make telecom equipment, 5G, base stations, cell towers, things like that, and then they make smartphones. Well, in the telecom space, the 5G equipment space, the concern is on critical infrastructure here in the United States. You would say, well, okay, why don't we support our own firms and not worry about them, since we've basically banned them from providing stuff for the U.S. market? And the issue is, well, we don't really have any competitors in that space, right? There's Huawei, there's Nokia, there's Ericsson, there's a little bit of Samsung. There's no American firms to promote as national champions. So really, then the only alternative approach, I guess, if you're a government policymaker, is to try to cut Huawei down and out of that space. So how do you do that? Well, one thing that they need for all of this equipment that we provide is semiconductors. So you see these rolls out of semiconductors starting last year to try to cut Huawei off from some of the key inputs that they need. But then, of course, you realize with global supply chains and a world of production that we're not the only ones that make semiconductors. And so Huawei can just access it from other countries and firms in other countries. And not only that, but the semiconductors that we sell here from the United States are frequently produced in other countries. And so our normal rules, these export control laws, just don't tackle the underlying problem, doesn't affect things. And so then what do we do instead? And this is getting to the multilateralism issue. We look at the other companies around the world that would be the alternative suppliers, the TSMC in Taiwan, the Samsung in South Korea, that would be suppliers to Huawei in China. And we essentially say, do we have any leverage over them? And the answer is, at the moment, we might through the equipment that we provide. So we have this industry that's, my understanding is largely centered there in California on semiconductor manufacturing equipment, a lot of the key elements of which are required by firms around the world to be able to provide semiconductors to anybody. And so we threaten all of these foreign companies located abroad not their governments. We don't go to their governments and say, could you please tell your companies not to export these sensitive technologies to elsewhere around the world that we might be concerned about. We go right after the foreign companies and say, you have a choice. You can either keep buying the necessary inputs, the equipment from American companies, or if you want to keep selling to these Chinese consumers, you're gonna be cut off. And all that's well and good and may work for a while. Ultimately, I would assume that the companies abroad are going to be upset by this at some point and go to their governments and say, why aren't you representing us in our interests here? But now, what has happened over the last, week or so publicly is we have a shortage of chips, right? So the automobile industry is having to idle plants because they can't access semiconductors. Some of this is obviously pandemic related and Zoom, and we all need to backfill our home offices, and that's shifted some demand away from them. But what that means at the moment is all of the major manufacturers around the world of semiconductors have said that they're going to undertake massive investments and scale up production to ramp up semiconductors. Well, the big question now is, are they going to go back to the American equipment makers and ask them to provide the equipment? Or are they very worried that, well, when we did that the last time around, we found ourselves vulnerable to American export controls? So might we look for alternative suppliers instead, given that the United States has not been acting multilaterally over the last couple of years and has acted very unilaterally? In any case, in a world of complicated supply chains, in a world of complicated international relations, when you have these frictions that have started to pop up with US and China, dealing with how to operationalize multilateralism in practice becomes very, very challenging. And so the Biden administration has sent all the right signals, but I think they're going to have a very, very difficult road ahead to try to operationalize that in practice.
So Chad, one quick follow-up is when we think about the U.S. and China, we actually talk as if we're the only two countries in the world that matter, the only two relationships that matter. Isn't one response that the U.S. could take that would be more effective than the bilateral response is, how do you lift everyone else's boat? How do you help India? How do you help Southeast Asia? In other words, create alternatives for the approach that China might provide. But the stronger the rest of the world gets, doesn't that act as a buffer, or actually act as a balance between what the U.S. and China are going to be going through in the next 15, 20 years?
I think that's exactly right. I think the approach of the last 4 years, which was not only, it went beyond that, right? So it was not only we're going to be conflictual with China, but by doing so bilaterally, we're actually creating opportunities for other countries to, get access to the Chinese market. Now that the United States companies are going to have to vacate because of the trade war. So it's now creating disincentives for those countries, at least in the short run, to kind of come to our side, say. But I agree. I think ultimately that's what you're going to have to do, is to recognize that there has been too much emphasis over the last 4 years of trade being somehow a zero-sum game, which it's really not. It's a win-win. Yes, there are distributional winners and losers within countries, and we know that. We need to deal with those effects better. But for countries as a whole, trade is win-win, and it does sort of lift all of these countries' boats. And so getting that message out and pursuing policies that are going to be beneficial to lots of players, I do think, and we'll see. The Biden administration has said that trade's not going to be a huge priority in terms of trade agreements, but they are just inheriting such a laundry list of things that they're going to have to tackle, that I think they're going to find dealing with some of these issues on trade is going to end up in their lap sooner rather than later.
Great, thank you very much. So I'm going to move on to Nick Borst. And Nick's background has been on U.S.-China, FDI, capital market flows. He and both, his work at Seafarer and the work that's been done at the Rhodium Group with Dan Rosen has been really instrumental in helping us with better understandings of how that's evolved over the last 15, 20 years. And so, Nick, I'd like to ask you, there's a growing U.S. investment relationship, but it's changing with moving from more of an FDI-related relationship to more of a capital market investing relationship. And you have written quite persuasively on the conflicts that creates. And so would you care to comment on that? And in the context of the discussion so far, what's the importance of that particular part of this relationship?
Yeah, thanks, Gary. And just to echo everyone else, delighted to participate on this panel. So the US and China have seemingly stumbled into this enormous investment relationship without fully thinking through the consequences of what that entails. And I think, the Chinese side of the flows is well known. That's been the acquisition primarily of US Treasury reserves. But really what's changed over the past couple of years is an enormous increase in the holdings of Chinese securities by US investors, now measuring in the hundreds of billions of dollars. And so in an ideal world, I would think that this would actually be a positive development for the relationship. If you look at the aggregate returns of holding these Chinese companies over a long period, they've been quite attractive, the occasional high-profile fraud aside. But instead, it's actually turned out to be a new source of conflict in the US-China economic relationship, and quite a toxic one, in my opinion. And I think, most of the concern right now is coming from the US and policymakers in Washington. And those concerns really revolve around two things. It's number one, are US investors being subject to undue risks by investing in China? And number two, is US capital flowing to Chinese companies which damage US national security interests? And so I think much of this criticism has some basis in validity, and it's given fuel to the ammunition of critics of China by China's own lack of transparency. So if you look across a variety of different items, whether it's financial disclosures, this issue we've heard a lot about with the access to audit work papers by the PCAOB, whether it's efforts to promote the development of Communist Party committees within Chinese companies, both state-owned and private, whether it's the seemingly willingness of Chinese companies to really participate in all sorts of government initiatives, whether it's Made in China 2025 or Belt and Road, to seemingly be an implementing force of these government policy activities, often in a way that doesn't make a lot of financial or economic sense for the company or its shareholders. So this has given a lot of fuel to concern and mistrust in the US, and it's led to this really wide variety of economic restrictions we've seen US policymakers move forward with in the past couple of years, whether it's sanctions, export controls, pressure for Chinese companies to delist, investment restrictions through this most recent executive order that we've seen, a really unprecedented range of different tools of economic statecraft that have been directed at Chinese companies. And while I think, the US has a valid interest in protecting its national security through these tools, in some ways it's gone too far. And we've seen an instance of painting Chinese companies as a whole with a very broad brush, and not enough work, in my opinion, has really been done to narrow in specifically on, building the case of why a specific company is participating in an activity that is a specific risk to US national security interests. So in that environment where, I don't think we've done enough to really build the case, and I understand there will always be, matters of active intelligence where not all the details can be revealed to the general public. But I think there's still quite a bit of a room for the US to put forward the case of why a Chinese company really is a threat, why it's important for US businesses and investors to divest, to break contracts, to completely decouple from this company. And that's important, not only for building public support here, but also I think heading off some of the backlash to this activity that we see in China, where I think, a popular perception to all these US actions in China is that, it's really a matter of retaliation, punishing China, kind of implemented in a capricious way, more about keeping down China's economic rise and actually addressing true national security threats. So, I think if we see changes both on the Chinese side in terms of addressing real and valid concerns that the US has about transparency and openness of Chinese companies, and at the same time, if we on the American side can commit to, frankly, a system that we would be happy if our own companies were subjected to in a foreign country, and I don't think we're there yet. I think if we can make changes on both sides related to that, we might get to a place where this investment relationship stops being so toxic and can actually prove to be, once again, more of a stabilizing force for the US-China relationship.
So Nick, a year ago, you wrote a piece about Huawei and how it should go public so that the transparency in Huawei would actually eliminate a lot of these concerns. Do you really think in today's environment that would help? I mean, if I was Ren and the team at Huawei, I'd be going, all I have to do is go public, raise $30-40 billion, and all my problems will go away.
Yeah, so that op-ed I think has a little bit of a satirical aspect to it. It's sort of a modest proposal. Of course, Huawei will have lots of difficulty going public, but in some ways that's really the point. If a Chinese company wants to be accepted overseas, they need to commit to a higher level of transparency than we've seen. I'm no expert on Huawei, but from what I've read, their ownership structure is quite murky. There's not a lot of clarity on who the actual control party is within that company. And so, part of the process, going public is not the only way to do this, but it does force you to publish your financials, to answer investor questions, to go through all the disclosures that are required of that. And, if a company isn't willing to go through that, then I think there's a legitimate response that, then maybe they can't be trusted with critical parts of infrastructure in a foreign country.
Great, thank you. I'm going to move on to David Dollar from the Brookings Institute. And David recently published a book, China 2049. And that was a compendium of many different opinions about the issues facing China over the next 30 years. And what I wanted to ask David to start was, having looked at all of the different combinations of input that you received and published in the book, did that make you more or less positive about China's ability to overcome the challenges that it has? In other words, are you sitting here today saying, actually putting the book together made me realize China's more likely to achieve the, as you say, economic superpower status that it looks like it's headed towards, or that actually some of the more intractable problems are going to materially impede its progress in that direction?
Well, first of all, Gary, thank you for including me on the panel. It's a great pleasure to be here. So that work on China 2049, most of the contributors are Chinese economists based at Peking University. And the simple answer to your question is, I would say the work together did make me more optimistic that China would address a lot of its challenges. I liked Lingling's early point that we often think of China as a monolith, but in fact, there are lots of different interest groups and there's lots of different opinions. And clearly there's a range of topics where there's no scope for debate in China. I'm not naive about that. But I was impressed that in terms of key economic policy areas that will weigh on China's future, there's actually a lot of scope for debate. For example, Kevin Rudd mentioned the dual circulation. I view this as a very vague phrase. It's not a phrase that economists, I think, can easily grab onto. But I know that there's an active debate in China about what exactly it means. Some of it is aimed at more reliance on domestic demand, domestic innovation. Depending on how they encourage that, that can be a good thing. But the other part of the dual circulation is remaining integrated in the global economy. And I see there's a struggle going on with the reformist forces pushing for things like joining the RCEP, making the investment treaty with the European Union, trying to stabilize economic relationship with the United States. So I think you still got quite a few policymakers and just intellectuals, middle-class people who would like to see China more integrated in the global system, and they're pushing for that. And the ultimate, where China ends up in 2049 is going to depend a lot on a number of different policy choices. Some things are baked in and they can't really easily change, but other policies can make a huge difference. So, they're going to end up as a superpower because they have 4 times as many people as we do. But how far they progress in terms of per capita income, in terms of technological level, in terms of productivity, I feel like the jury's out on all of that. And it would take pretty ambitious reform in a lot of different areas to really get an outstanding outcome by 2049.
You and I were trading notes about the issue of debt in developing countries. And part of that has come through BRI, part of it's come through just the normal course of developing country growth. How do you think of that issue in the context of the U.S.-China relationship?
I mean, this is a good issue for the U.S. and China to cooperate on. People often cite climate change as a key area where the U.S. and China have to cooperate if the world is going to prevent catastrophic climate change. I would argue that developing country debt is another area where we really have to cooperate. China is the largest official creditor, so China's got a lot of skin in the game. A lot of their clients in Africa, for example, are now facing debt distress, having trouble servicing their debts. They've been hit by the pandemic and the global recession. Meanwhile, the U.S. is still the biggest shareholder in the International Monetary Fund, and we are the leader of the global financial system. And so the only way to really work out things for a lot of developing countries will involve some amount of debt rescheduling from the Chinese side, IMF programs, U.S. support. If we don't work together on this one, then I think we could end up having quite a few ugly crises throughout the developing world. So there are going to be a number of these issues. It's not going to be easy for the U.S. and China to work together, but there are going to be a number of these issues where our common interest should bring us together. We don't have to like each other, but we're going to have to work shoulder to shoulder on some of these global problems.
When we were talking earlier in the program, we're talking about the fact that the U.S. now will need its allies. So instead of having allies at convenience, you're going to really need allies and treat them as partners and not just transactional relationships. Which system, from an economic perspective and from your view of the governance issues, which system between the U.S. and China is really better prepared to do that or capable of doing that?
Okay, now that's a really tough question. I am a big fan of democracy, and I think it's going to be a huge challenge. I like what Chad was saying. It's going to be a huge challenge for the United States to get our key allies on board with various changes in the global economic system. Now, we need to update the WTO. I think we need to expand the resources of the IMF, including recognizing that China will play a bigger role. So it's going to be very hard, but I think democracies tend to make more stable decisions. The Chinese system, the authoritarian system, it may seem like an advantage that, first of all, Lingling reminded us, Xi Jinping, can't really just do anything. He's got to deal with interest groups, but he's got a lot of authority. I think if China really wanted to join the Trans-Pacific Partnership, if Xi Jinping really wanted to join, he could probably get that process started in a pretty aggressive way. But authoritarian countries tend to be inconsistent over time. We have no idea who the next ruler is going to be in China. You could end up having a messy succession. So I don't mind the fact that democracy, it might take a little more time and effort. I think we'll get more stable, inclusive outcomes. But it's a great question.
So I'm going to go through the panelists again in the original order. So we'll start with Lingling. And the term reciprocity has come from one that 10 years ago was anathema to most policymakers to now one that looks to be at the core of many of the discussions back and forth, not just between the U.S. and China, but between the U.S. and some other countries. And I guess time will tell how much of that was driven by the last administration and how much of that will be modified with the next administration. But Lingling, if you saw the U.S. and China moving into a more reciprocity-based relationship, in other words, so many journalists, picking on you specifically for that, different terms in terms of economics, transparency, stock markets, market access, et cetera. Would that be a productive path for the U.S. and China to go down, or does that lead to a more rapid worsening of the current relationship?
Well, we all see how reciprocity, this whole concept, led us to, in the past couple of years, things have become dramatically worse because how the Chinese interpret reciprocity is you throw me a punch, I'm going to punch back. And they punched back every time the U.S. threw them a punch. So things really haven't improved much at all in the past few years. So I don't know what the Biden administration is going to do. Are they going to continue to use this concept going forward? I really do not know. But from the Chinese perspective, I mean, the previous panelists really painted a very good picture about some of the problems in the U.S.-China relationship. A lot of those problems, not just because of China, also stem from the U.S. The underperformance of the on the U.S. side in the past few years, kind of made it look like that China's system really works. Right now, I think it's really amazing that we are now having this debate over which system might work better, like democracy versus authoritarian system, because 10 years ago, it was pretty clear, even for the Chinese people, the US is this shining city up on a hill, right? But now China looks awesome, it looks great. I mean, their economy is rebounding so quickly. But longer term, obviously, a lot of the issues the Trump administration raised about China, this reciprocity issues like market access, that's the main thing, and the protection of IP, those kind of things. It really works in China's favor longer term, especially in terms of China's economy. But if you look at the phase one agreement, it basically failed in every regard to address those long-term issues, this so-called reciprocity. On the other hand, it strengthened China's state-led economic model. Why is that? That's something the Biden administration should really think hard on. One thing that makes it really complicated for the U.S. is that, I just don't think the U.S. has much leverage over China these days. I mean, what kind of leverage do you have? You talk about financial decoupling. Look at what global investors have done. They poured money into Chinese markets. That probably also has to do that China's stimulus is much modest than the Fed and other global central banks. And you wanted to cut off the technology exports to China, and U.S. chip makers, they're freaking out, right? So I just really think, going forward, as Chad said, U.S. and China wants to have basically a more constructive relationship, not outright hostilities. But it really depends on both. First of all, the U.S. has to adjust its strategy. This kind of pressure tactics really don't work. It really makes things worse. You punch me, I punch back. That's reciprocity in Chinese view. So,
let me interject, because I'll move on to Chad in a second. But there are folks that would take a look at China today and not necessarily see a shining city on a hill that is all good and pure. And so I think that the reciprocity, I would generally agree with you. But I want to ask Chad something along this line, which is tied to the reciprocity comment, but it's related to trade. So reciprocity, what Lingling was talking about, that tit for tat, you do this, I do that, what that does is diminish trust over time. Is it possible to have a productive trade relationship without trust? Because what you wind up with is, to me, trade always goes way beyond transactions. It's not just about trading one good for another, one service for another. It's something that's much deeper than that. So, Chad, I'd like you to comment on, can you have a robust trade relationship without an underlying system of trust?
Yeah, I think that's a key element to it. And, it's trust in the sense of whether we're going to live up to the rules of a trade agreement that we have negotiated and signed with each other. Trust in products, right? One of the biggest concerns now in this national security and critical infrastructure sort of area is the nature of some of the products that are being traded. It's unclear how trustworthy they are, right? So I think this is a very, very important question. Back to the reciprocity one, though, and I find this fascinating. So I'm a trade economist. And for me, reciprocity this is going to be unpopular, I think, but has always been a very, very positive thing. It's taken on a very different meaning over the last couple of years. But reciprocity for trade economists, trade negotiators was a positive. It was, you open up your market to my exporters, I'll sell you more, and reciprocally, I'll open up my market to your exporters and you'll sell me more. And this is the win-win of the benefits of trade. Now, over the last 4 years, the reciprocity has meant I'm going to impose tariffs on you, close down my market to you, and you're going to reciprocally close down your market to me by the same amount. So I think it's just, we have to recognize that that's lose-lose, just like trade is win-win. And so if we think about reciprocity as we each now agree to do something for the other, then there are gains to be made. Now, it may be traditional areas of bundling that maybe haven't been before, right? I think there's a lot of gains in the U.S.-China relationship, whether we're talking about climate, bringing in climate, global pandemic response. But I think now there are additional benefits, even in the trade space, now that we have tariffs still, despite this phase one agreement, on $350 billion worth of what we buy from China, to reciprocally negotiate, make some of the adjustments and reforms that would make us happier on SOEs and subsidies, take on some additional commitments on technology transfer and not doing that kind of thing, lower some of your tariffs. China has been doing this unilaterally over the last couple of years, but continue to do that. And we, someday, the United States would reciprocally lower our tariffs. Reciprocity, I think, can be harnessed again to actually have a positive role in the U.S.-China relationship and getting us away from how it's been, I think, misused over the last 4 years.
Yeah, thank you very much for that. So, Nick, there's a question for you in the Q&A, which I'm welcoming Q&A. I'm trying to manage it as we go through this. But the question is, how do you see the competition between the U.S. and China in development and deployment of intelligence systems? And you've done some work in that particular area, so I'd like you to address that. We'll come back to reciprocity in a minute in a different format, but if you could address that question specifically, it'd be great.
Sorry, Gary, can you repeat the question about, is it national intelligence?
How do you see the competition in development and deployment of intelligence systems?
Like espionage and that sort of thing?
You know what? That's a great question. Why don't you take it as an espionage question, since it's not clear, and I think that's probably the area you'd be well suited to ask.
Yeah, well, I'm definitely no expert on that. I think there's been a lot of back and forth between the U.S. and China behind the scenes that is, proved to be a key contributor to the deterioration in relations, particularly, the U.S. allegations of economically based hacking attempts by Chinese-linked actors. I'd like to pivot a little bit because I think this issue of reciprocity is so important, and Lingling and Chad are exactly right on this. I think, the past several years, we've had a very concrete example of a cycle of negative reciprocity where, we're upset with a behavior by China, so we take actions, China takes countervailing actions, and then it just spirals all the while the relationship is ratcheting down to new lows. And, when we look at the end of the day, I'm not sure how much we've achieved, whether we've actually advanced U.S. interests in that way. And in many ways, I think it's actually reinforced some of the worst inclinations in Beijing in terms of, trying to decouple from U.S. supply chains, trying to reinforce this indigenous innovation drive, more state control over key sectors of the economy. So if the goal of this negative reciprocity was really to push China on a better path, in my opinion, it's been a pretty abject failure at this point. So, echoing what Chad said, I would like us to focus more on a cycle of positive reciprocity where, we are setting standards and treating foreign investment, foreign businesses, not just Chinese businesses, but everyone in the same way that we would like our own businesses to be treated. And that we are going out and building alliances with like-minded partners and allies who share those same values and can commit to those standards. And then we've created these groups that have such enormous economic influence around the global economy that it's really, China, you have to join or be left out of the club. And so I think that's a much more positive, durable way for us to move forward and to, incentivize the best behavior in China rather than, the current negative trend we're on.
All right, thank you. So David, so as we're talking about reciprocity, another way I want to take that is we can't block China's rise. I think Bill Burns made some very articulate comments about that over the last few days, nor should, in my opinion, should we actually be trying to block China's rise, but we can shape the way in which it rises or shape the environment in which it rises. How would you think about that from your perspective, at Brookings and in the writings and work that you've done? And then going back to, is reciprocity simply, again, diminishing the trust that you need to establish, not only with China, but with our other allies, such that if we're going to shape that environment, we're going to need to build that trust and build that kind of multilateral system back together?
Right. So thanks, Gary. So it seems to me the best hope for shaping the environment in which China makes decisions concerns strengthening and renovating what I think of as global institutions of different types. So China has now indicated it'll go carbon neutral, carbon zero by 2060. That's not quite ambitious enough, but that's a good pledge. But that needs to be anchored in an international agreement in the same way U.S. commitment to carbon reduction has to be anchored. So I think on the economic side, we really need to modernize the WTO, the World Bank, and the IMF. And we're stuck in a bad place where, IMF and World Bank in particular are shareholding institutions where the shares change slowly over time based on various rules. And based on those rules, China should now have much more weight in the IMF and the World Bank than it does. And the developed countries as a whole need to have less weight. And there are other important developing countries too. India is underweight, some of the rest of the developing world. So we really need to make those institutions, the governance, reflect the modern world economy. But what you hear a lot from the United States is, well, China's a bad player. They act in bad faith. They cheat on the trade side. They're lending money to developing countries in a non-transparent way and causing various debt crises. So we've got this very unfortunate stalemate where in some sense the U.S. position is, China would need to dramatically change its behavior in order for us to accept them having this kind of role in the global institutions. And the Chinese side are looking and saying, well, the fact that you won't give us our fair share in these institutions reflects unwillingness to accept China's rise on any kind of terms. So I think that's a tough one, but I think the U.S. needs to show leadership here. We are still the biggest economy, and we will be, I think, for the next decade. And we're the most technologically advanced country, the military power. So I think we need to show leadership in reforming these institutions, but that one's going to be very tough politically. I just finished an autobiography of Harry Truman, who came into the presidency in April 1945 and faced a god-awful mess around the world and did a remarkable job. And I think, Americans can rise to global challenges, and we need that kind of leadership now.
So I'm going to start with you and then go in reverse order, you and then Nick, then Chad, and Lingling will get the last word. But one of the things we hear a lot about today is many of the discussions, many of the debates, the disagreements between the U.S. and China are less about China and more about the U.S. and more about where we find ourselves. Either you can call it a lack of confidence, you can call it, as you were mentioning, systems that need to be overhauled. How would you address that? How would you think about it from the standpoint of fixing our own shop? And what would be, because we talked this entire panel about China, but it's about the U.S. and China. What do we need to fix on the U.S. side to make this work going forward? If you take about a minute or two on that, it'd be great.
Yeah, I would just say the U.S. has had very disappointing economic results for a couple of decades now. We had the global financial crisis. Now we have this pandemic, and we had stagnation of median wages, even in periods of relatively good growth. So just briefly, I think we have an agenda of domestic reform that includes more infrastructure, family-friendly policies so that parents with children can easily participate in the labor force. We've got some specific geographic issues. I think we really have an agenda of rejuvenation, and I understand that has to be at the center, and it looks like for President Biden, domestic issues will be at the center initially. That's good. But I hope we recognize that that needs to be complemented by the kind of international reform I was just talking about. That's the real recipe for the United States, is domestic rejuvenation and then restoration of the international institutions, recognizing that they need to evolve. We should be happy that we're moving to a world where most of the GDP will be in the developing world, because the overwhelming majority of people live in the developing world. So if we want to live in a world without poverty, we're going to be in a world where we will be a relatively small share of world GDP. And the alternative would be we're 50% of world GDP as we were at the end of World War II, and everybody else is desperately poor. And it's hard to see that that's going to be a stable, pleasant world.
It's amazing how difficult it is to actually get that point across, though, on a regular basis. So, Nick, your turn. What is the real focus, or what would you like to see, following on David's comments, see the U.S. to do?
Yeah, Gary, I think you're exactly right. It's first a reappraisal of the U.S. and having some more confidence in our own strengths. I know that's been difficult to do over the past couple of weeks, but the U.S. really does have enormous strengths economically, within the financial system, within technology, and then using that as a basis for really evaluating the relationship with China. And, as Kevin Rudd said, there'll be aspects of the U.S.-China relationship where there's possibility for collaboration, and there'll be aspects where it's more adversarial. And I think, a realistic appraisal of those areas where we need to compete with China, where China represents a threat to our interests, but also not blowing that out of proportion and provoking an overreaction. And so I think if we can do that, we can tailor our policies, in a much more targeted way that will actually do a better job achieving the goal of protecting our interests, and also, building support both domestically and with our allies.
Super. So, Chad, you're up next.
I would echo all of those things, and ask that we as Americans be a little bit less nostalgic for a world that's never coming back. We have our policymakers be a lot more honest and evidence focused, and recognize that the world has changed, and we're no longer going to have the manufacturing middle class society of those kinds of jobs that we had in the 1950s. The world is just fundamentally different, and we need to adjust to that. And we need to build back better at home to deal with that new reality, instead of somehow blaming it on things happening in the rest of the world that are 99% of which outside of our control. There's so much that we can control at home. And so I think, like David and Nick, I'm heartened by what seems to be a Biden administration emphasis on fixing our own problems and priorities. We can't disengage globally, but we have to recognize that the challenges that we face are largely of our own doing. For as big a challenge as China in a geopolitical sense, it's really not, what is the underlying source of what's economically challenging us, the distributional challenging, the inequality challenges that we face today.
Thank you. Lingling, you kicked off the panel, and you get to finish it. And I think one of the comments is particularly for you, is much is said around the lack of continuity of U.S. leadership relative to the U.S.-China relationship. So if you could incorporate that in your comments as well, it'd be great.
Well, thank you. I'm very honored to have the last word. So I think the only thing I would say is, don't look at China as an enemy or evil empire, because China is not. I think for future administrations, be the next Biden administration or going forward, probably just should accept China for what it is, because this one-party system is not going to change in the immediate or near term. And the state will always have a big role in the economy. And I agree with what David, Nick, and Chad said. The key issue is to know, how to work with China on those on the issues like climate change, debt restructuring, developing countries, and a pandemic. For the greater goods of the world. And And at the same time, trying to encourage China, get them to adhere to higher global standards. That's a more realistic goal as opposed to things like regime change, because it's never going to happen and could just lead the world into a chaos.
Well, thank you very much for those comments, and thank the panel very much for their time and their energy. So it's a great way to kick off the day. So Margaret, I think it's time for us to turn this back over to you.
Thank you, Gary, and thank you to all of our session 2 speakers, some returning and others new. We appreciate all of you. You raise trust. We'll be hearing more about that in our tribute to Secretary George Shultz this afternoon. This program and our work would not be possible without our sponsors. Thank you for supporting this conference to Kenson Ventures, NEA, Magdalene Yum, Blackstone, Chevron, Tencent, and Seafarer. There are more. All of our sponsors are listed on our website and in our program. Thank you.